Perfect. Well, thanks everyone for joining us here today. My name is Patrick Hankinson. I'm a partner at Concrete Ventures. We're a $17 million Atlantic Canadian pre-seed fund focused on finding great ideas and founders looking to build massively scalable businesses here in Atlantic Canada. One of our core values is to have an impact on the broader startup community outside of our current portfolio. So pipeline development is key to us, which is why we put on these webinars. Today, I'm excited to have Francesca from Carta to give a talk on cap tables. Carta helps companies and investors manage their cap tables, valuations, and investments and equity plans. They are industry experts when it comes to cap tables, and we'll be sharing that wealth of knowledge in today's webinar. If you have any questions, feel free to ask it with our Q&A feature or through the chat feature. And if we have time at the end, we'll try to answer them. And with that, I'll hand it over.
Awesome. Thanks so much, Patrick, and thanks for having me join this webinar. Super excited to be here. So just to give everybody a little bit of background on myself, I've been with Carta for about 4 years now. Really have seen the company grow from a Series B company with under 200 F company with over 1,000 employees. So it's been a really fun ride to see the company grow and scale. And similar to maybe a lot of first-time founders, prior to coming to Carta, I really had no concept of equity. So it's been really fun to learn this whole equity system and learn about cap tables. So I'll be sharing a little bit of my knowledge today with you all and kind of really starting from a baseline of understanding what a cap table is and how you can use your cap table to your advantage from both the employee perspective, the investor, also the fundraising perspective. So with that, I will go ahead and share my screen. All right. So just quickly from our legal side of things, a word from Carta's legal team. This communication is on behalf of eShares Inc., DBA Carta Inc. This communication is not to be construed as legal, financial, or tax advice and is for informational purposes only. This communication is not intended as a recommendation, offer, or solicitation for the purchase or sale of any security. Although this presentation may provide information concerning potential legal issues, it's not a substitute for legal advice, and any opinions or conclusions provided in this presentation shall not be ascribed to Carta. Any liability for reliance on the information provided herein. So thanks for bearing with me and that. And just a little bit about Carta. Patrick touched on this a little bit, but Carta is really a place where it will be the single source of truth for your equity management. So what that means is Carta will do the cap table management, we'll do the valuation. 498 is very specific to the US, but we're also seeing a lot of Canadian companies utilizing it as well. Carta will be sort of the place where you can have this electronic representation of your securities to kind of keep everybody on the same page. A little bit about us. We have, I would say today it's closer to 19,000 companies on the platform, over 1 million equity holders, over $1 trillion in equity assets under our management. And we also have listed on this page today, one of our Canadian companies on the Carta platform, Tilray. So we're super excited to have them on. To kind of do a quick run of show, here's a couple of things that we'll be touching on today. So the first part that we'll talk about is really establishing a baseline. So what is a cap table? What are the components? Why should you care? And here's some tips and tricks for that positioning and creating your cap table. The second part that we'll touch upon is how you can structure your equity compensation. So what will that mean to your employees? How you should think about utilizing a cap table management system and also utilizing your cap table even really to help create transparency and establish these really clear-cut grants that you're able to send out to your employees. And finally, some tips and tricks about building out your cap table and how you should think about managing it. So again, as I mentioned, starting with the basics, here we're going to talk about what is the importance of a cap table for our startups and for our investors, and really establishing that baseline. So at its core, a cap table is a tool that's used by startups to show the overall capitalization of their companies. And what I mean by that is, what does the ownership within your company look like? And what are the different investors that are present on your cap table? And it also helps you to keep track of every single security or transaction that has been issued out to your investors or employees. And another level set for you all, a security is pretty much a general term for any sort of issuance that's on your cap table. So whether that be a common share, preferred share, sometimes they're called ordinary shares, safes, notes, that's all under the security umbrella. So just keep that in mind as I'm talking through some of these terms. And finally, the last thing that I want to mention is the cap table about your company. So you started, maybe you're two founders in a garage. From the investor's perspective, I'm sure folks that are investors on the line really understand this, but the cap table can tell this story. Hey, we started out from this, we've gotten funding here, here, and here, we've had X employees, and here's how we've grown, and here's how our company has scaled. So we really think that the cap table can be used as a tool to help you express that story, and also really ensure that it's clear cut. There aren't any surprises from the investor standpoint or the employee standpoint. So yes, that all sounds great, but why should you actually care about this? So the first thing that I want to touch upon is there are just a few reasons why the cap table is incredibly important. But one thing to keep in mind is it will help you understand as a founder what your dilution might look like. So one thing that I often see when I'm talking to startups is they've raised all of these different types of, maybe it's a safe or maybe it's a convertible note, and they've raised it from multiple people. And then when they raise their price round, they realize that those instruments actually impact the dilution as a founder. So this is something that we think that founders really should take a look at and help them understand, hey, you might have maybe 50% ownership of your company prior to your price round, but everything that you've actually brought into your cap table, that also has an impact on where you stand and what your ownership percentage might look like. So we think that having a really clean cap table set forth at the beginning will help founders understand this, as well as help them model out what their potential dilution might look like. The second thing that I want to touch on is, I would say, with the rise of granting equity to employees, I think many employees are at a point where they kind of understand what is happening with equity, and equity almost becomes a huge incentive for them to join companies. So with creating this culture of transparency, or creating a culture of ensuring the employees actually know what they own in your company, this can really bring on and incentivize employees to, hey, we're working towards a bigger goal here. I own a part of this company, or can potentially own a part of this company, so I'm going to do all that I can in my function to elevate the status. So we think that equity will be a really key player, and especially if employees know what that equity means, they will be much more incentivized to work hard for the company. I touched on this a little bit prior, but by having a really clean cap table, this will clearly communicate what each investor and employee holds within the company. So I often see, and we'll talk about this a little bit later on what to avoid in cap tables, but we oftentimes see there's sometimes ambiguity, especially in those pre-seed rounds, of who owns what. So we've seen deals be derailed the night before a price round close, where somebody comes out of the woodwork and they realize that the safe wasn't included on the cap table. So this is a real life example of how your cap table can impact your deal of a price round or other deals that are coming forward. And then finally, I think the cap table can become a really complex mess if you don't have a hygienic cap table from early on. So one thing to keep in mind is things might be very simple at an early stage, but it can get complex very, very quickly. So as you have employees joining and leaving, and those employees are getting equity within the company, that oftentimes becomes a really cumbersome process to manage if you're not staying on top of it. So again, if the night before a board meeting or a week before the board meeting, that can take up a lot of your team's time just to kind of clean up and get in a place where you're comfortable sharing the cap table with your investors. Recommend that staying on top of this will be a really great and key thing for your company's well-being or economic well-being, I should say. And a couple of things just to double click on things that investors might zero in on. As I mentioned, the cap table has the ability, if it's not in a good place or it's not in a clear place, the cap table has the ability to derail a deal if there are surprises from the investor standpoint, or if folks are coming out of the woodwork or have been missed on the cap table. So investors will pay attention to any sort of nuances or any sort of questionable things that are happening on the cap table, just because when an investor, in whether it be a pre-seed round or a price round, the investors will want to know, who are the other folks that are on the cap table? Who will I be working with to help this company succeed? So that is something that investors will pay attention to in relation to the cap table. And they're also going to want to understand, hey, who are the founders of this company and what does their ownership perspective look like? Another thing that investors will take a look at is, hey, maybe there were two co-founders, now there's only one founder. They'll want to know the story behind that, just so they can understand what they are investing into and what they're standing behind going forward. So I think that's a really key thing. And having this cap table will help you articulate that and explain exactly what's going on. Another thing that is present within your cap table that investors will be able to tell from the cap table is they'll be able to see what level of turnover has happened. So on the cap table, folks are typically recording if their employees have equity. Folks are typically recording who has been terminated, and terminated is more of a general legal term to say that a person has either left or been fired. They'll be able to see that, and they'll want to understand, okay, what's going on here? Who are the different employees available within this company to kind of get the job done, as well as what does the remaining option pool look like? And we'll touch upon that a little bit later, just so you all are aware of what an option pool might actually be. So a couple key terms to be mindful of before I show you an example of the cap table. So common stock is something that is typically granted to employees or founders. Sometimes it's called ordinary shares, and it will be really, in terms of the grander scheme of things, those folks that have common shares will have the least rights and preferences associated with them. Preferred stock will typically be granted out when there is a price round. So this will be what a convertible note or a SAFE will convert into, and it will be typically from the investor standpoint and will have a higher level of rights than the common shares. Pre-money valuation, this is the valuation of the company in order to price the preferred shares for investors. And then post-money valuation, that's what you're seeing kind of in the headlines and in big news. This is what, after the round happens, this is what the company is worth, and also articulates the new cash that has been brought in. And then finally, a couple of other terms to be aware of. Price per share is typically the pre-money valuation divided by the fully diluted cap. Just quick math that you can get to. This is an oversimplification, but typically that's what it means. Stock plan allocation, as I mentioned, this is something that we'll talk a little bit more about later, but essentially this is something that's set aside specifically for employee grants. And then finally, fully diluted capitalization. This is all the shares that have been issued and are outstanding, plus everything that could be issued and outstanding. So this means the option pool, etc. And then everything that's remaining within the option pool. And we've been talking about this conceptually a lot. This is what the presentation is all about. Just so folks have an idea, this is a sample cap table. So what we're looking at is a typical example of a ownership graph that shows what folks own within the company. I believe right now we're just looking at preferred, for the most part. We're looking at some preferred holders, two common shareholders, and then you can also see what folks have in the option plan as well. And this is a more simple cap table, but you can imagine something like this where you have hundreds of employees, or if you have down the line, you have a lot more investors. This can get really complex, especially as folks are transferring shares, if you're allowing that within your company, as folks are getting options, leaving, things can get really complicated, and there's a lot of underlying things that might not be necessarily easily navigatable in this sense. So now that you've seen an example of a cap table, what makes a good cap table? And to explain what makes a good cap table, we're first going to talk about what makes a bad cap table. So what makes a bad cap table is you never want to kind of have these unofficial things floating around. So we say avoid the back of the napkin, grants or issuances. This creates a lot of ambiguity, either if this is sent out to an advisor, if it's sent out to a contractor, if it's even sent out to an investor. In this example, it's sent out, I think this example is supposed to be like a SAFE. This can be very confusing and also really hard to keep track of. We've seen a lot of times where folks will come to Carta and they'll say, okay, like I have this, and I think this happened. And I have this person that works for me over here that I told them that I was going to give them equity. We never want to be in a situation where that's the case, just because it prevents you from really establishing, again, a hygienic cap table. And secondly, it also prevents you from being able to have full control over that cap table. So we'll talk about this a little bit later, but you'll likely want to set up a strategy for when you're granting out shares for investors, or even when you're granting out shares to employees. It's really important to establish and set a precedent, just so you can kind of have a sense of what that will look like from your investor standpoint, and be able to establish a precedent, establish a plan, and establish a framework to issue out shares and to issue out equity to employees. So as I mentioned, back of the napkin math or back of the napkin issuances are never good. So let's just, say that we had some back of the napkin math and we realized that, hey, we might want to get a formal cap table set up. How should we do that? So the best way to do that is to work backwards. So a couple of critical factors to keep in mind. So the first thing is you'll definitely want to finalize an understanding with co-founders. So a question that I often get is, what should our founder equity look like, especially if we have co-founders? And a couple of things to keep in mind for folks on the line that have co-founders, or if you're an investor, things to kind of think about from the investor standpoint to advise startups is the co-founders relationship oftentimes will be dependent on who does what. So a couple of things to keep in mind as you're establishing, maybe it should be a 50-50 co-founder split, maybe it shouldn't. But things to keep in mind is role. Sometimes the CEO will get more equity than the other co-founder. Whether that person has some technical knowledge or IP that makes them, a more valuable co-founder in the equity world. Other things to think about does this person have a strategic advantage? So maybe this person has run a couple startups before and they have relationship with investors and can raise capital quickly. That's another thing to consider. And then finally, the last thing to consider is to understand, is this a true partnership where it's 50-50? Is one person doing more work than the other? Or maybe this person is still at their full-time job and hasn't jumped out to fully join the startup. So definitely that's something to consider even before you have established those founder shares. Something to consider who owns what and who does what to help you get to a place where you're able to establish that co-founder split. Another thing to keep in mind is you'll want to also get a hold on your incorporation documents or any sort of documentation that establishes you as a company. This will be hugely important because this will kind of be the basis of your company. So you'll definitely want to keep that safe. And it usually has some information about the number of shares available and things like that that will be established by your attorneys. Another thing that you'll want to kind of work backwards from is ensuring that you have stock purchase agreements in place. So these are any sort of things that have happened, whether that be issuances to co-founders, whether that be issuances to outside investors, or any sort of established investment that has been associated with the company that needs to kind of be listed on the cap table, and you can work backwards from what it says in those documents. The next thing to keep in mind is your option pool. And this will typically be something that will be drawn up by attorneys, and they will say, hey, here's your option pool, here's what it looks like, and also here are the different terms associated with it. So we'll include things like what happens when your employees depart, what happens when your employees are fired. Things like that will be really important for you to think about and establish. And then the final two things, they're more, I would say, corporate governance aspects, but any sort of convertibles that you've issued will need to be present on your cap table. And as I mentioned, I work with a lot of founders, and one thing that they don't always realize is these are hugely important and critical for your cap table. And the reason being, as I mentioned this very early on in this presentation, is these convertibles will have an impact on what your dilution is as a founder or a co-founder or even an early stage employee, just because they will convert into shares later on. That's the nature of what they are. They will typically convert into shares, especially things like a safe instrument. Those investors are expecting that things will convert into shares. So anything that you raise with regard to a convertible, that will have an impact later on. And then finally, any relevant board actions. Usually for an early stage company, the board actions will be things like approving a CEO, things like approving option grants, but oftentimes the board may just be the founder or co-founder in process. So we talked about the bad, we talked about how to work backwards into your cap table. Now here's some advice on what makes a good cap table. So a good cap table can really be a strategic tool for you all. This relates to being able to think about and establishing a framework to distribute equity. So I mentioned before that, establishing a framework is hugely important, but it also creates this level of transparency. And when you're working with employees, they might talk about what they've been granted in equity. So you want to make sure that everything is uniform across the board. I think it's fair to say that in the equity perspective, it typically is granted for early employees, they're typically granted a little bit more equity just because it is a bit riskier for them to join a company that they're not sure is going to succeed or not. So that's something that is pretty standard, but we do think it's generally a good idea to establish that framework early on. We also think that kind of having this cap table and a good cap table will help you collaborate better with your legal team. So we all know that attorneys are very expensive. So the more that you're on top of your cap table, the better place that you're going to be in later on. So this will help you establish, hey, attorney, here's exactly what the source of truth is. I think cap table software does a really great job of that, just because everybody is on the same page. You have one source of truth and all of the information at the same time. So there's no longer this level of information asymmetry that often occurs between companies and their legal counsel. And this will help you going forward as you're raising a round, when the attorneys will need to be heavily involved to help you out in that sense. And then finally, this also helps you forge a clear-cut relationship with your investors. So oftentimes investors will have things like information rights where they will require their companies to send them either on a quarterly basis or a biannual basis to send them over information about their company. Certain cap table softwares, Carta included, will have the ability for you to share your cap table with your investors in live time, meaning that there's no ambiguity. Investors will always know what the happenings are with your cap table. And then it also creates this very clear-cut way of establishing, hey, investors have nothing to hide. Here's everything. You have information rights. You can check out my cap table on a standard cadence and see what that looks like for you. My final point on kind of the cap table management aspect is stay on top of it. I think this can oftentimes, the cap table can oftentimes be pretty daunting, especially if you are waiting for maybe the last minute to get it cleaned out before a board meeting, or you have an opportunistic investment that will be coming through. By staying on top of your cap table, you will always have this clear line of sight of the ownership within your company, so that you don't have to scramble to make it right once there's a point in time where you might need your cap table to be in a better spot. We also think that by having this day one mentality, you will stay organized, and it can also save you some money. So we see a lot of times that these companies will go to their attorneys and they have to do these really strenuous, what is called like a cap audit or like a cap restructuring, in which the law firm will go through every single document that is associated with your company. And it's usually a very long process just because they have to read everything. And this is all done by human intervention. So if you have a very clear-cut cap table and there aren't any surprises, you never have to go through something like that. And it will typically only come up, as you're going through something like an M&A transaction. I was a former goalie in college, but I also think that in this instance, offense is better than defense. So one thing to keep in mind is that you can use this as a tool to plan ahead. So use this as a proactive way to think about, hey, here's how I want to establish this framework. I know I want to bring on a funding round in 6 months. And I know this is what the dilution will look like for me. And I also know exactly what type of grants that I'm going to issue out to my employees. So in this instance, offense is better than defense. So always try to kind of maintain that proactive mindset. So one thing that I want to just throw in the chat prior to going into this part, but Carta has the ability to, or we have a cap table template for you to all to download in the event that you don't already have one. So just through. And the next thing that we'll touch base on is the role of equity compensation in building your company's culture. So we talked a lot about investors, we talked a little bit about employees, but now we'll just hone in really on what it looks like from the employee's perspective. So what we're looking at right now is lifetime data from Carta, and this is what we're seeing, over time, as well as the median option plan fully diluted percentage by valuation. So typically what we're seeing for earlier stage companies or companies that have raised under 50 million, the option pool is about 10 to 15% of the fully diluted percentage. So what that means is that companies that are at a smaller range are setting aside between 10 to 15% just for employees. And again, I think strategies for granting equity will be really key, just because you're not going to want to give away that entire option pool from the beginning. So what that means is you'll want to reserve a specific portion of your option pool in order to incentivize potentially really key hires. That means bringing on a more technical founder. You'll want to make sure that you have room to grant that person on, or if you are, let's just say, you are yourself a technical founder and you want to bring on somebody who's more business focused or more operations focused, you have the ability to do that by establishing how you want to think about your option pool and how you want to think about divvying that amongst your employees and amongst your executives. So another thing that I think Carta and many companies, we're seeing this mentality come up as well, but building a culture of ownership will only benefit you as a company. So it's really interesting to think about, how you want to frame equity to your employees. Maybe you want to make sure that employees are really understanding of what this means to actually hold equity within your company. And so a couple of key terms to provide employees around their equity grants, and generally speaking, we think it's a good idea to actually have a to actually have like an offer letter that shows what it means for the employees and help them understand what their. So I like to, Carta has like a better offer letter template where it shows here's the exact value. So the exact value will stay the same over time, but the notional value will increase over time. So if you think about it in an econ type graph, you have like a straight line that's going across, and then the notional value will increase over time. And that's at the point where employees might have an upside. So whether that be a secondary transaction, whether that be a merger acquisition, or down the line, if that company has a big exit, what that could mean for the employees will help them understand what the potential upside could be for them, regardless of their current strike price. So a couple of things to help employees understand and things that employees might expect when being granted equity is they're going to want to know the total number of shares, the type of shares, and just listed as options. If you all plan to hire employees in the US, they might have employee incentive stock options or non-qualified stock options. So that's very US specific, but just something to keep in mind if that's in your purview and something that you plan to do. And then down the line, folks are typically granted restricted stock units or restricted stock awards. Other things to keep in mind and something to make clear to your employees is what the strike price or price per share might be. So what this means is, what is that price that you're granting that employee's equity at? And then a couple of key dates. So when is the grant effective? When is it exercisable? As well as what does the vesting schedule look like? Another thing to keep in mind is candidates might ask the employer before they're even hired what the fully diluted percentage is for their options. So this is, from the employee standpoint, this is a way for them to gauge, hey, is this higher or lower than what I'd expect? And will help them understand what their ownership percentage might be in the company. The next thing that I'll touch on a little bit, shifting gears a bit away from employees, but what should the investor communication look like? So shifting away from employees, certain investors might have information rights. So how can you establish a clean cadence for those investors and for those key strategic advisors that you might need? How can you establish a really clear cut communication and clean line of communication, really? So in information rights that an investor might have is they will likely be able to cap table. They will likely be able to ask you for some financial information. And one thing to keep in mind is if you're using a cap table software, you can, with a click of a button, you can share that with investors. So you can share your cap table with them. And then another thing to think about is you may want to establish a cadence of where you're proactively sending out some investor communication. And just some things that they might expect is KPIs, financials, projections, and things relating to that are month of runway, the burn rate, the revenue, your head count, things like that are things that investors might be expecting. Another thing to keep in mind is as your company grows, all of the investors on your cap table might not hold a board seat. So these investors are not going to be as innately connected with your business, but you still brought them on as investors for a reason. So you're going to want to know, hey, I want you to be in the loop here. So if I need to tap you or if I need to ask you a specific question, here's the information about my company so that you're prepared. So finally, we've talked very conceptually about everything. How should you think about building your cap table? And what are the things that are available, tools and things available for you as a founder, or if you're an investor, what are the tools available to your portfolio companies? So the first option that I would say popular up until a few years back, before the rise of tools like Carta or other folks in this space, is the first option would be to build your cap table from scratch. So you can build it to your specifications. It's no cost to you. You can, have it in a living Google Doc or something like that. But I would say that it's very difficult to maintain as soon as your company starts to grow. So as soon as, you're not two founders in a garage and you have employees and you have investors, this gets pretty cumbersome and also pretty complicated very quickly. So we always think about what are the pros and cons of just being on Excel, and how can you potentially hedge your risk really and ensure that there aren't any mistakes that happen on that Excel spreadsheet. Here's some examples of what we've seen. Really just kind of, the first graph is a Google sheet, the second graph is an Excel, just showing kind of the common stock and pre-money options, as well as more, I would say, old school informal cap table in Excel. As I mentioned, we do have the Carta cap table template that I just shared in the chat. So feel free to utilize that as well. And this will have directions for you how to use this if you were thinking about starting in Excel. And the second option, which I am biased, but I would say is the preferred option, is to use cap table software. So the pros of this is right now there are a ton of free options for you all to keep your cap table updated and stored on software immediately after a company has been formed. So you can really keep track of your cap table. It's a fully, I would say, more easily auditable version that lives in the cloud. You can see anytime that something has been granted. You can see who has granted it, who has signed on it. So I think that's a really key way to think about this, in the sense that there aren't any surprises. Everything's there, and everybody has that same information. From the legal perspective, from the founder perspective, it's pretty uniform across the board. The cons, and as I mentioned, there are free options now, but the cons are that this will likely cost money in the future. But as I said, this can save a lot of money down the line, just because of the sheer nature of having to rebuild this would be very, very costly. And even having to fix a mistake on the cap table can also be from the attorney's perspective, as they'll often have to be very thorough and go through everything, versus looking at a cap table management software. They can know exactly what has been issued and by who. And I'll just send out the Concrete VC link in the chat, but Carta does have a free option for our cap table management software. And it's called Carta Launch. It's for companies that have under 25 stakeholders on their cap table and have less than $1 million raised. And so with this will be, companies can start on a cap table software right from the inception. So check it out. I sent over that link, and it's specific to the Concrete VC community. So definitely check that out. And if you have questions, you can always reach out to me. All right, so now we're opening it up for some Q&A, and my email is questions. My team is partners@carta.com. So you can always reach out to me personally or reach out to that email. But we are opening up the floor for some Q&A, and I see that there are some folks in the chat that I'll take a look at. Okay, this question is from Laura. And Laura asks, I've always wondered if you need to have a legal oversight on any changes or updates to your cap table. I've generally felt leery of changing everything without consulting lawyers. As a result, I feel like I have not felt like I can own the cap table and manipulate with more information that could be helpful to investors. That's a really great question. So I think Carta sits on almost like this intersection between the founders and their attorneys, just because, Laura, as you mentioned, the attorneys oftentimes might be the ones to kind of own the cap table. I think Carta creates kind of a better environment for a more collaboration. And I also think that there are a lot of nuances that attorneys are very good at managing. But there are also some things that we see many companies taking in-house. So an example of that is typically we see that companies are going to want to have their lawyers help them issue out shares or record shares on their cap table after a price round, just because they have a lot of innate knowledge. But really that part takes I would say a minimal amount of time for them, especially if they're using a cap table software. Where I think founders can have a lot of influence and can do, I would say, the heavy lifting is when you're issuing out grants to employees. We see that the company will have the best knowledge about their employees. You're the group that will be issuing out offer letters and sending out those equity to employees. So we see some companies taking that on rather than their lawyers, or maybe they're just, doing the heavy lifting, meaning that they're kind of drafting everything prior to the lawyers coming in, check it over, and then be the group that sends it out. So I would say it definitely is a balance between both the company and the attorneys. And I think having a cap table software helps to increase that collaboration and ensure that everybody is on the same page. So you as the company are not wasting time managing or keeping track of your own cap table, and the lawyers are keeping track of their own cap table, and sometimes these don't line up. So I think that is a really interesting concept where I think companies can take on some of this action and also be kind of the group to be on top of these changes and potentially have the lawyers just double check it and use their knowledge to kind of double check everything. Okay, the second question is, how do you share guest access to view a cap table through Carta? We want to send it out today. Okay, so Sheldon, I will follow up with you separately, but there is a cap table sharing section in Carta. And so you will be able to kind of see that within the workflow.
Perfect. Actually, I have a question for you. Is there a way with Carta to play out various scenarios? So, for example, if you're looking at an acquisition, how that acquisition might play out to all of the investors, including note holders, or if you're doing a preferred priced equity round, can you actually see like how a number of like stacked convertible notes will actually convert in this round to give the founders a sense of what their equity actually might be?
Great question. So available to all Carta clients, and this is more so catering to pre-seed companies, we have a safe and note calculator. So what that does is it allows companies to think about dilution and think about how things might convert and impact the dilution for the founders. So that's available for everybody to test out. And also there's, I would say it's better in app, but there's also I'll type it out. There's a safe and notes calculator at safes.carta.com. that allows you to think about that and kind of model out what your potential dilution might be. So that's on the early stage side. For future projections and kind of understanding different exit scenarios, Carta also has scenario modeling tools that allows you to kind of check out both a scenario and a scenario meaning a financing scenario and understanding what might happen with a price round. And then separately, we also have a waterfall analysis. And what a waterfall analysis will do is show you different breakpoints and different payouts depending on the exit valuation or the exit amount. So we do have those tools both available. I would say from the perspective of a founder, it will really help you conceptualize and understand what might happen in different scenarios and get you prepared for what that could potentially look like for you.
Okay, perfect. Well, I don't see any other questions, but I guess one just came in.
Great question. How does Carta pricing change with the valuation stage of the company? Great question. So Carta has, as I mentioned, a free plan for very early stage companies, free for companies that have less than 25 stakeholders and under $1 million raised. So that's our first tier, I would say. And then pricing changes based on the number of stakeholders. So it will scale up as your company grows and scales. And then we have a couple of different plans available depending on the stage of company. So for very early stage companies, maybe you do need a valuation, even though it is US centric, maybe your attorney recommends that you get one. You would opt into our starter plan, which kind of has the most basic features. And again, it's priced based on the stakeholder quantity. Or maybe you might need the growth plan, and that includes scenario modeling and also investor updates and allows you to send out things to your investors. So those are kind of our two, I would say, products that are best fit for Canadian companies. And coming later this year, we will have IFRS reporting for expense accounting. So that will be in our scale plan. But as I mentioned, right now, it is not quite done, but will be out later this year. And again, if anybody has any questions about Carta more specifically, feel free to shoot me an email. I'll throw it in the chat just so folks can have that. There we go. But feel free to shoot me an email and I'm happy to help.
Perfect. Well, we appreciate you making the time for everyone. I think we actually hit a new record today with I think we had about 63 participants. So really appreciate you making the time to help everybody manage their cap tables.
Awesome. Thanks, Patrick.